You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know where the futures options markets are? Well, let's find out together. It is time for TWIFO This Week in Futures Options. My name is Mark Longo. I'll be your host, your guide, your band leader through this 1-hour session. That is TWIFO. Reminding you, if you like what you hear, this show, anything else we do on the network throughout the week, keep those reviews coming. It really does help new folks discover this content. More important than ever in these troubled times, keep those questions and comments coming too. We do love to hear from all of you folks out there. Let's see who we're hearing from on the program today. I am very pleased to say, even though it has been a good run in the FTSE Russell hot seat of late, we had Rick Rosenthal, who holds down all things FTSE Russell at CBOE a few weeks ago in the FTSE Russell hot seat, talking about all things launch of the upcoming, well, now not even upcoming, the live mini Russell 2000 options. We had Catherine Yoshimoto last week, the director of product management over there at FTSE Russell. They were all great guests, but I am very pleased to say we are back once again in the FTSE Russell studios, joined by our old friend, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell, back from his sojourn to the southern lands. Mr. Smith, welcome back to TWIFO, sir. It has been too long.
Mark, it's great to be back. I'm looking forward to having a great show today.
Should be fun. How was your sojourn to the South, a.k.a. the land of coronavirus, sir?
It was actually good, sunny and 85 every day. Unfortunately, I was working for 85, 90, 95% of the time, but I did get out for an early morning walk each day to check out the dolphin and pelican, and it's always nice to be in a warm climate versus the frozen tundra that we've most recently had here in Chicago. But we're thawing up here. I think I dragged some of the warmth back with me.
Yeah, you come back to Chicago and it's almost 70 degrees, so you brought it back with you, sir. So well done. Let's see if we can keep that spirit alive as we head right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers. Sean, it's been a while, so I don't know if you remember how we do this here, but this is the portion of the show where we break down everything that's moving and shaking over on CME since our last show a week ago. So where should we begin our journey, sir? To the light side or to the dark side?
You know, the performance of the Russell 2000 has just been such a direction of the light side. I'm going light side.
I had a feeling you might go that way. By the way, looking at the chart here, listeners, and it is actually a little bit more biased to the dark side this week, about 2/3 in the red and about 1/3 in the green. It's been a little while since we've seen it lining up that way. But Mr. Smith has requested the light side, aka the upside we go. Number 5 to the light side this week, RBOB Gasoline, up about 6.75%. It was number 2 in the same direction last week, up 4.1%. By the way, if you're wondering, maybe we'll break down RBOB on the show. It only does about 2,000 contracts, so not the most scintillating of energy products, at least from an options volume perspective. Underlying movement, yeah, it's moving, but the options are not keeping pace yet. Number 4, the only equity that can even hold a candle to the Russell 2000 this week, it is the S&P Mid-Cap 400, up 7.15%. Number 3, soybean oil. We get out to the beans, but we don't get out to the soybean oil that often, up 8.5%, almost 8.6% this week. It was in the exact same spot last week, number 3 to the upside, but it was only up about 3.8% last week. By the way, if you're wondering, soybean oil does some paper, about 105,000 contracts. So we could plant our flag there a little bit later on the show. Number 2 is a product you may be familiar with, listeners, the good old Russell 2000, up nearly 9% this week, 8.7%. That would normally be enough for a runaway number 1 with a bullet to the light side. But this week, no, that crazy beast known as Bitcoin has managed to usurp the top spot out there this week, listeners, up 18.1%. Coming at showtime, it was at 57,705, up 8,150 points just this week alone, not even going all the way back to our show last week. So big moves out there in the crypto side of the space. Let's go now to the dark side here. We've got wheat, number 5 to the dark side, off 2% exactly. It was number 5 last week as well, also to the dark side, off 3.35%. So a rough couple of weeks for wheat, and wheat does some paper, about 47,000 contracts. We've broken down wheat before on the show. Perhaps we'll hang our hat out there again this week. Number 4, iron ore, off 2.09%. It was number 1 in the other direction last week, up 5.51%. Before you get excited, yeah, not really any appreciable options paper to break down out there. Numero trace here. We got nat gas once again moving and shaking. Any given week, nat gas is on one of these lists probably. This week, it's number 3 to the dark side, off 2.4%. Number 2, soybean meal. So the soybean complex moving quite a bit this week and in different directions, which is also kind of interesting to watch. Soybean meal off about 2.75%. And that also does some paper, about 32,000 contracts out there. Not quite as much as the meal, or not much as the oil, but interesting stuff. Number 1 to the dark side is Eurodollars, off 2.82%. That's usually not enough to really make much of a hay on the list, but this week it's enough to get you to number 1 to the dark side. Let's go to the vol side of the space really quickly as well. The vol movers and shakers for the week. On the dark side, the vol dark side, number 1 is the March Bitcoin contract. Vol coming in 24%. Number 2, we have the 3-month mid-curve May Eurodollar option, off 11%. And number 3 to the vol decliners, again, these are off 11%, is the Eurodollar 3-month mid-curve April, off 8%. So March Bitcoin off 24%, Eurodollar May off 11%, Eurodollar April off 8%. And lean hogs, let's add a 4th, why not? Lean hogs off 3% from a vol perspective this week. Vol gainers this week, though, a little bit farther out, Bitcoin May up about 4.25%. And we got some more Eurodollars following up with about 3% for the Eurodollar April range there. So interesting stuff afoot. But Sean, you haven't been on in a while. I know you're champing at the bit to get into your spot. And of course, your spot was pretty much the most active thing this week outside of Bitcoin. So let's get to it. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's do it. Let's talk some equities. You know, if you're talking equities, the other side of that coin is, of course, volatility. And it's a very volatile day out there. It's a very mover and shaker day in the equity space. Most of the major indices feeling their oats today. The vol coming in. That's pretty much been the narrative since our show last week as well. Come into showtime when we said for a while RVX was glued to that 30 strike, couldn't really break through it. It bounced well above it recently. It was up to about 39, almost 40 on our last show. It's come off quite a bit since then, down to about 32, pretty much even. That puts it down about 7.5 points from our last show. So still north of that 30 handle, still frothy. And again, it's hard to argue with it because small caps are moving. It doesn't matter upside or downside. It moves at the end of the day. So that translates some vol. VIX come in to kick off of the show is at about 21.75, puts it down almost 10 points exactly, 9.99 from our show last week. So yeah, vol has come in a wee bit since last week. VVIX at about 112, puts it down about 12, almost 13 points from last week. So it was hovering a little bit north of that very active barometer we used of 120 last week. This week, right around 112, still below. It can't get too much below 120. Listen, we're just moving too much. Vol is moving too much to keep it too far below 120 for too long. And vol Q, aka the at the money vol of the NASDAQ 100. Again, NASDAQ's been moving quite a bit of late as well. 26.38, down a little over 7 points, about 7.12 points from our show last week. That puts that VIX to RVX spread widen out again, up to about 10.25 points. That puts it about 2.5 points, pretty much exactly wider than it was last week. And the VIX to vol Q, so the S&P to the NASDAQ spread, a little under 5, about 4 2/3 points, puts it about almost 3 points wider, about 2.9 points wider than it was this time last week. So those spreads widening out as vol is coming in aggressively. All right, we set the table, Sean. A lot going on in your neck of the woods this week. What's been lighting up your tape since you've returned from the South in the land of small caps, sir?
You know, the land of small caps just keeps lighting up my tape. It's just been a tremendous performance of small caps, you know, ever since the acceleration of the vaccines. The Russell 2000 has just outperformed every index out there. And you mentioned volatility coming in on with the RVX, the volatility of the Russell 2000 down to 32. 32 is not a low volatility. It's a healthy volatility coming down from 39, even higher volatility. And then we've been talking about the options activity in Russell on many of the latest shows, upside call buying, steepness of skew and downside puts. But this performance of the Russell 2000 index and all in it has just kept volatility at this healthy, tradable, harvesting volatility opportunity for our options audience, right? So it's just really exciting to see. Our Philip Lawler, who I've mentioned many times on the show, put out a recent blog on small cap performance. And of course, Russell 2000 is in pretty much a category of its own these days when you're looking at the Russell on a global basis on, small caps globally. So it's just outperforming everything. It's really interesting to see. And, the makeup of the Russell 2000 is what's doing it. The weights are not heavy in tech. They're in pharmaceutical and biotech stocks, banks, travel, discretionary spending. As the U.S. economy turns around, people spend money, people hire, people are turning their businesses back on, all adding fuel to the small cap fire. As I'm actually quoting Philip Lawler in one of his comments in his most recent blog that came out just last week. But to add to this fuel is the volumes, the massive volumes that are trading on CME. Last week, all-time record high volume in the Russell 2000. 425,000 contracts traded in a single day. Open interest is at tremendously healthy highs of over 600,000 contracts of open interest. Just adding confidence to the market, investability, tradability, all of these various comments or all of these various descriptions just bode well for just a healthy market for customers to have a tremendous experience getting into the small cap investment as an investment into the small cap indexes. The mini Russell options on SIBO were launched last week, and just yesterday they had a record volume day in mini Russell options, symbol MRUT. We're going by the term MRUT in the mini Russell options. So lots going on, and with this momentum, we've got. In June, we have Recon coming up. And I think Catherine Yoshimoto on your last show went into the schedule May 7th being rank day. It's going to be the very first day to watch to talk what's going to be happening in the reconstitution that happens at the end of June. But we've got this fantastic season coming up. We've got lots going on. And plus, we have the momentum of the Russell 2000 Small Cap Index just leading the charge from an investment perspective. So, yeah. Exciting times, lots of volume, really interesting dialogue out there. Lots of reports, and small caps are a headline, and it's exciting to see.
Yeah, you're right. It is interesting stuff. I'm looking at some of these numbers myself. You guys crunched the numbers since we all went out trick or treating, or maybe did it socially distanced last year, which doesn't seem that long ago. On October 31st of last year, since then, the Russell 2000 listeners up 43.6%. I mean, just say that out loud for a second. This is a major equity index in a major developed market. Since Halloween, up nearly 50%. Compare that to the Russell 1000, which, as Sean was mentioning, of the mega cap kind of tech names, up about 19%. Good numbers still, of course, but 43.6%. You can see why folks are flocking into the Russell 2000. Let's see what that paper is translating into today. You guys can generate those reports for yourself completely for free. CMEgroup.com/TWIFO, TWIFO, or /TWIO. Once you're in there, go to the equities, pull up the Russell 2000, and you can follow along. More paper lighting up. Like you said, record kind of weeks out here from a volume perspective. We're seeing similar action out here in the E-mini Russell 2000 options over there on CME. Another hefty week. And it seems like yet again, Sean, most of the action, 28% and then 27.9% respectively, are in the weeklies that are going out tomorrow and going out next week effectively. So as is usual with equities, people like to play very close to the fire in terms of expiration. I like to make myself have a little bit more time. So tell you what, there's also about 26.5% of the paper going up out here in the April contract. That has about 38 days to go. A little bit more sane metric to analyze from a vol and a skew perspective. So we're going to hang our hat out there. In terms of where the Russell 2000 is right now, 2331. Sean and I barely had time. We never even got time really to have our Russell 2000 above 2000 party because it's already 330 points in the rearview mirror. Plus, parties kind of these days a little bit frowned upon, obviously, but still interesting stuff afoot. In terms of the April contract out here, we are seeing, let's see, where is the vol out here from an April perspective? Vol right now at about a 29, pretty much even, listeners, off about almost 2.5 points. So still frothy, a little bit below that 32 level we saw in RVX. But again, that's predominantly a front month analytic there. In terms of skew, the puts last week, 16.8% rich. This week, getting richer, up a point, 17.8%. So all you premium harvesters who want to get a little bit of downside action in the Russell 2000, getting a little bit juicier out there. The calls, 11.5% cheap last week. This week, 13.9% cheap. So calls coming in, puts getting bid up. Again, as you're rallying, you kind of expect that, but still interesting to see it playing out when we're seeing such numbers out here this week. In terms of the most active contract this week, the biggest trade, it was actually 2275s, which sound like they're out of the money calls, or at least they should be, Sean, and they were until not too long ago, until this week, because now they are deeply in the money and doing nearly 2,000 contracts there alone, 1,500 on Monday alone. A good chunk of that closing. So I guess as we broke through that strike Sean, folks taking their calls off the table, taking their profits probably. We know from past analysis and Matt coming on here looking at the skew on these small delta calls that folks are gobbling up upside calls in the Russell 2000. So I'm going to guess that they probably had those on open long and now they took them off when they blew through it. Let's see. Yeah, the calls got a lot cheaper in the March contract going out in about a week as well. They went from 8.7% cheap to 13.2%. So that would also back up that analysis that folks were selling to close some calls that were upside now in the money out there. Once we get beyond that, let's see. It looks like it was back to the puts, the 21.5 puts going out tomorrow that were leading the dance with a lot of paper, almost 1,000 going up just on Monday alone. A good chunk of that opening. So opening 21.5 puts. Again, we rallied about 141 points out here. So we weren't at the 21.5 level, but still interesting stuff here that there was so much opening paper on Monday here on the 20th. Maybe some folks harvesting premium. Given the fact that those puts got pretty bid up, I'm going to go out on a limb and say probably not. But interesting stuff afoot here as well. 2,100 puts also pretty active out here this week. Those are pretty far out of the money. Let's go a little bit farther out and down to see what's interesting. If that's not far enough out for you listeners, let's go back to the April contract. 1,590 puts, lighting it up out there. Almost 1,400 of those bad boys trading. That's another very interesting strike. Going up almost every day this week and every day closing. So someone closing quite a bit, almost 1,400 of the 1,590 puts in April. Interesting. So maybe someone had a hedge on and we decided that strike no longer relevant, getting the heck out of Dodge. Either way, that's where the action was. Interesting stuff afoot here, Sean, as we kick things off in equities, but there's a lot of stuff trading over here at CME. Sean, we broke down a lot of interesting stuff here just in our movers and shakers. We talked beans, we've got nat gas, we've got wheat, a euro dollar. Where should we hang our hat next, sir?
Let's, rates are near and dear to my heart. Let's talk interest rates.
How did I know you were going to say a little bit of rates? The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. We're going to break it down. We talk euro dollars a lot here on the show, and with good reason. They move quite a bit out here. We're going to change it up a little bit because a lot of folks have been fixated on the yields of the 10-year out there a lot lately. So I think we're going to hang our hat out there. By the way, 10-year, no slouch itself when it comes to volume, already at 2.25 million contracts on the tape so far this week. So a pretty active week. Before we hang our hat out there, though, really quickly, let's look ever so briefly here at the Fed Watch tool. It's getting a lot more action out here these days. As we mentioned a couple of weeks ago here, when we had Russell Rhodes was also in the hot seat on the show a couple of weeks ago as well. And we were pointing out on that show then that the probabilities on the Fed Watch tool had ticked up to about 4.1%, not in the upcoming meeting, not in the March meeting, but in the April meeting, and pretty much persisting all the way throughout to the end of the year. Actually looks like it's increased now. It was 4.1% throughout the year. Now April is up to 4.1% chance. June, same probability. That's of a 25 basis point increase, listeners. By the time you get to September, that's up to nearly 10%, 9.8% chance of a 25 basis point increase by September. So interesting stuff, a little bit farther off down the curve, all the way through to December. It holds about that same level, 9.8%. I was waiting for that moment when we would see a little bit of a tick up. It was kind of surprising to me that it stayed the same probability from April all the way to the end of the year. Sean, you've been hearing all this Sturm and Drang about the yields on the 10-year, sir. What are your thoughts about that as an old school rates guy? And then B, about how these probabilities starting to tick up here on the Fed Watch. Fed Watch coming to life again, sir.
It's interesting to see. And where do you see the reaction? You see it in volume and open interest in the CME's Eurodollar complex. And, it's really interesting. As soon as there's like economic stimulus, along with growth in the market, turning back, unemployment numbers improving, the I word comes back, inflation, and we haven't had inflation in a long time. But it's really interesting to see. It's being reflected. Fed funds rate at CME Group. You see you see speculation of there being some rate hikes, and it bodes for a healthy market. And there's nowhere better to put those trades on, put those hedges on than in the CME fixed income products. So it's exciting to see the volumes pick up.
It is interesting. Speaking of those volumes, let's parse some of them. Again, go to the interest rates drop down, listeners, on the TWIFO report, then go to the 10-year. You can pull this up for yourselves. You'll see how much paper is lighting up. Like I said, 2.25 million contracts on the tape. Of that, 33% going up in the April contract. Has about 15 days to go. So right outside our 2-week barometer here for where we like to break down skew and volatility. If you don't follow the 10-year every day, it's at about a 132.19 coming into the start of this segment. That puts us at about the 132.5 or so strike, being kind of the at the money strike. Vol, when you're talking the rates, a different beast. We were just talking about equity vol. That's obviously in the 20s to 30 odd range, depending on where you're looking on the different major indices. Bitcoin vol is going to be north of 100 coming into the rates. A different beast, 5% on the April contract. And that's off almost 0.5% over the course of this, since our last show, pretty much over the course of this week even. So yeah, a lot of vol coming in. And again, wasn't much vol to begin with out here. So vol, a different beast when you're talking about the rates, but the volume is there at the vol, not so much. The most active contract out here, the 133 half calls in April, listeners, doing a whopping 102,000 contracts on the tape as of right now, including the big day Tuesday, almost 51,000. That's more than some of the complexes we're going to talk about just in one day, just in one option here on the 10 years. Listen, I'll give you some sort of frame of reference. 31,500 on Wednesday, 16,200 so far today, a paltry 4,200 on Monday. And again, this was opening pretty much the entire week. So a lot of opening upside call paper here in April in the 10-year here, 133 half calls. Then we drop out and move out a little bit, actually out of April and into May, into the 131 half puts, doing 91, almost 92,000 contracts for number two. And unlike the calls we just talked about, these were predominantly closing. The big days were Monday and Wednesday. Actually, Monday was opening 34,700 going up on Monday, about 26,000 of that opening, 11,000 on Tuesday, 34,000 again on Wednesday. Most of those days were closing there as well, and about 11,500 today. So maybe a little bit more back and forth on the 131 half put strike than there were on the calls, which are pretty much all opening all week. But fascinating stuff afoot here, listeners. Oh, let's get back out to the skew. We skipped over that here. Let's go back to the April skew. That's where the lion's share of the paper was, 33, almost 34% of the paper in April this week. The puts 5.1% rich, so they were bid up. Again, that vol is kind of light, so a 5% premium to a 5% vol isn't that much, but still, it's something. This week, last week it was 5.1%. This week, 7.9%, so getting bid up a little bit, getting up to 8% there now. The calls, 5.5% cheap last week. This week, 10.2% cheap. So calls coming in. Puts getting bid this time last week out there in the 10-year. Let's keep on rolling. Let's go out to ags. I know we have a lot of ag heads in the audience who like themselves a little bit of ags. And like I mentioned earlier on the movers and shakers report, we've talked beans before, but we don't get a chance to talk some of the other components of the beans, like the soybean oil. Let's do that right now.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
Go on out to your agriculture listeners in the drop down, then grains and oil seeds. Then skip over soybeans and go right to the soybean oil. You'll see it does some paper, 106,000 contracts on the tape. Now, again, that's less than that one option we talked about in the 10 years. So frame of reference, but still a very active ag complex nonetheless. Coming into showtime, the soybean oil is at 54.75, up almost 3 points, or about 5.7% just on this week alone. If you go all the way back to our show last week, it's up 8.5%. So a good run for soybean oil. The vol out here, by the way, if you're wondering, it's about a 33.5, so up about 1.3 points. So you're talking in line with some of the vol we're seeing out there, and let's say in small cap land, for example, which was about a 32 in the RVX. In terms of where the action was this week, it was in the May contract. It has about 43 days to go. That did 43, almost 44% of the paper. So we'll analyze things out there. Puts this week, 6.8% cheap to the at the money, which was about like we said, about a 33 vol. And this week, 10.8% cheap. So the puts getting cheaper. Calls, 10.4% rich last week. This week, 6% rich. So the calls getting cheaper, puts getting cheaper as well. That's kind of interesting. The puts getting hammered, calls getting hammered as well. So let's see what's trading out here. Maybe we can highlight some of that out here. 54 calls were the most active contract out here this week, doing about 6,000 contracts, almost all of that on Monday, 4,640, 600 or so on each of the other days. All of that opening on Monday as well. So a lot of opening paper here to the upside here on these 54 calls. Again, we're at a 54.75, so it was upside. Now it's in the money calls still, but a lot of opening paper there nonetheless, which is kind of interesting. And the fact that we saw the calls come in so heavily, perhaps some overriding there to the upside, taking those calls down a little bit. We also saw the 51 puts pretty active, almost 5,000 of those on the tape, the lion's share on Monday as well, 3,300. Might be some event risk going on out here in the soybean oil. Maybe they had a report or something, because the way the wings came in quite a bit, it does make me think maybe a little bit of event vol came off the table, even though net vol is up on the week. So interesting stuff afoot out here. But again, 51 puts doing 3,300 contracts on Monday, most of that opening, about 700 again on Tuesday, 500 today, a little bit on Wednesday as well. But the bias was opening on Monday for a good chunk. So, and again, the puts this week got hammered as well. So it seems like maybe some opening vol sales on both ends of the skew here, the 51 puts and the 54 calls out here in soybean oil. Don't get a chance to hang our hat out in the beans too often, but it's fun when we get a chance to do just that. You know, Sean, we probably got to touch on some energy as well. We've got RBOB lighting up the upside or light side, but it only does about 2,000 contracts. We've got nat gas moving as always, so we could go out there again. Or if you like your old friend WTI, we can go there as well, Sean. Where should we hang our hat next?
Let's go WTI, please.
All right, I think we can make that happen as we head out into the energy complex.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to the energy segment. You guys want to find this for yourselves, go to the report, go to the energy drop down. Right now, we're hanging our hat in WTI, but you can look at RBOB, you can look at nat gas. We certainly have done deep dives into nat gas recently on the show as well. All right, let's see what we've got going afoot here in WTI coming into showtime. 66, almost 0.2, a little bit north of 66 handle. That puts it up this week, listeners, about 0.08. So not a heck of a lot of net movement out here in WTI this week, but that doesn't mean no paper lighting it up. There was quite a bit of paper actually this week. 493, just a tick under 500,000 contracts on the tape so far out here in WTI this week, listeners. So WTI pretty active, only 300 some odd thousand on the tape last week. So a lot more paper flocking in to WTI this week. Let's see where we hang our hat this week. Let's see. The April contract has 6 days to go, and that did 26% of the paper this week, listeners. Let's go a little bit farther out. You know how I like to do that. Let's go out to June. That did about 21% of the paper, and that has, 66 days to go. A little bit more sane way to measure your skew and your vol. Well, let's see. That contract's a little bit lower. That's about a 65.78, up about a third of a point over the course of this past week. Vol-wise, looking at about a 36 out here, listeners, about 1 1/3 point increase over the course of this week. So that puts it kind of in line with what we were just talking about out there in the soybean oil realm of mid to low 30s from a vol perspective. Also puts it in line with small caps out there. Let's see what we're looking at from an overall skew perspective. Last week, the puts were 6.2% rich. Remember, capital P means there's a premium, lowercase means it's a discount. 6.2% rich. This week, 7.4% rich. The puts getting bid up a little bit in June. The calls, 2.7% cheap. Last week, this week, 4.4% cheap. So calls getting hit, puts getting bid up. Sounds like a typical week in WTI, but that was back when we were down on the 40 handle. Things have changed a little bit now that we're 66 and change out here. In terms of the most active contract, the biggest trade out here this week, listeners, it looks like the 75 calls. Man, that sounds that sounds like such an outlandish strike to say out loud when we were talking about couldn't we sustain 40 on the show not too long ago? Here we are talking about 75, and it actually makes sense. It's about 9-10 points away, depending on where you're looking on the futures chart. So the worm has turned a little bit out here in crude oil of late, listeners. Let's see, to the tune of about 18,200, the 75 calls trading this week. The big day actually today, over 10,000 on the tape today. So someone's got a hankering for those 75s today. We don't know, obviously, the change in OI from today's paper, but about 3,000 going up on Monday and about 3,000 yesterday as well. Both of those days were opening. So opening upside call paper again, and the fact that we're seeing these calls get crushed, probably an indication of what's going on out there on those 75s, listeners. Then beyond the 75s, we drop off a little bit. We go out to the 70s here in July. They have 12, almost 13,000 contracts on the tape here this week. The most active day also today, nearly 5,000 on the tape. So upside calls in WTI are the order of the day today as we speak, lighting it up out there. Again, about 3,500 on Monday, 3,000 on Tuesday, 1,200 yesterday. Monday's and Tuesday's paper biased towards closing. Yesterday, a little bit of opening. We don't know, obviously, what's afoot yet today, but same story. If they're coming for these calls, let's see what the skew is telling us in July. The calls out there, 3.3% cheap last week, 5.6% cheap this week. So they're coming for the calls, looks like, in July as well, which is kind of interesting. So maybe drawing some lines to the upside, saying how this far, no farther. Maybe if they have some of the underlying, they don't mind dumping it. Certainly, we're at 40 not too long ago. You don't mind dumping it at 70 or 75. So it could be some covered call activity lighting it up there. Similar story out here in D, 70 calls, also pretty active out there, listeners, to the tune of about 12,000 lighting it up out there. The big day there was Tuesday, but almost 6,000 on the tape there, 3,000 on Monday, 2,600 or so on Wednesday, only about 1,000 today. Looks like most of that was biased towards closing, but not all. So a little bit of back and forth on the 70 strike in D. So let's look at D skew really quickly to see what that is telling us out there, listeners. The calls last week, 5.3% cheap this week, 6.8%. So calls coming in, puts getting bid again. They were bid in D's as well, 9.1% rich last week, 12.2% rich this week. So again, not hard to argue as we're teetering at these very high levels in the near term. Some folks looking to dump some at the upside or perhaps hedge what they have to the downside. Perhaps not entirely surprising out there, listeners. Let's see if we could squeeze on one more. I'll let it be dealer's choice, Mr. Sean. How about that? We've touched on ags already. We've touched on equities. We've touched on energy. We've touched on rates. We've kind of done a nice little cross section so far. Is there anywhere else we should hang our hats before we allow the listeners to join us on the show this week, sir?
You know, I'm a big fan of responding to listeners. So why don't we just jump in and respond to listeners' questions? It's always good to do.
All right, we can do that then. He wants to bump you up to the head of the list, listener. You guys have some product requests in there as well. So I think we can make that happen as we head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the feedback segment. This is where you guys and gals can get a hold of us with your thoughts on a wide array of topics, Sean. In fact, you're my go-to presidential historian and trivia expert. And the last time you were on the show, it's been a little while, was right on the heels of the President's Day holiday. So we had just done a fun, tongue-in-cheek poll for our audience where we asked them for President's Day, who's your favorite president? Which one is numero uno? We gave you four choices: Washington, Lincoln, FDR, and Truman. It was a slugfest. At the end of the day, Lincoln pulled it out, 43.8%. Washington, number two, 37.5%. FDR, 10.9%. Truman 7.8%. We talked about this last time you were on the show, Sean, which is interesting, and I thought it was done, but then we had an interesting comment come in, which I wanted to get your thoughts on as my go-to presidential historian. This came in on YouTube. A lot of folks listening to the shows on YouTube these days. If you like it there, have at it. We don't judge. This came from Chris Gilliam. He says, Lincoln was a terrible president. He invaded the South, starting the war that was not necessary. So there you go, Sean. A little bit of a hot take on Mr. Lincoln, who is probably the closest thing we have to a deified president here in the U.S., particularly here in the land of Lincoln. What do you say for Chris? Throwing a little bit of fire, a little bit of shade the way of Mr. Lincoln, sir.
Yeah, not to stir things up, but maybe we read different history books. Lincoln ended the war, right? So he was incredibly instrumental. He was good for the economy back then. And things like the Gettysburg Address come to mind, and unifying the country. Just like a marketplace, there's a bid and an ask. There's a bid and an ask for who's the greatest president. So everybody's entitled to his opinion, and I do respect him for his comments.
I give him points for having the temerity to challenge Lincoln. He's one a lot of folks don't like to challenge these days. So I like when folks maybe poke the bear a little bit out there with some comments that are outside maybe some of the main shit. I like that. So keep it up. Chris Gilliam there. All right, let's move on to this question from Arabs with a Z. He wants to know, does anyone offer a product that just trades the volatility skew in crude oil? I think that would be an interesting product to trade. Yeah, I'm with you, Arabs. That would be pretty cool. To my knowledge, there is no such fund or product out there that will do that for you. Of course, trading the skew is a bit of a subjective thing as well, listeners. You could do it many different ways. You could just do, if you're just looking at the upside call wing, maybe you just want to do an at-the-money vertical, the at-the-money call versus an out-of-the-money call. Maybe you want to do more of a broad skew play, something like a risk reversal or a collar where you're buying one wing and selling the other. There's a lot of different ways you could do it, which is probably one of the reasons why no one does it. Arabs, also, it's kind of complicated for a lot of the masses out there to understand. I mean, once you get them on board something like futures and futures options, that's already a bridge too far for a lot of the long-only equity masses out there. Now you're going to tell them you're going to trade a skew product on crude oil. I think that would be cool. I think for the audience of this show, it would certainly be cool. Beyond that, is there a huge market for it? I don't know. The nice thing, Mr. or Mrs. Arabs, is that you can do this yourself. So if you are so inclined, if you want to trade some skew, we were just talking about it just now in WTI. You can go out there. You can do call verticals. You can do maybe wider verticals that go through the at the money. You can go risk reversals. A lot of different ways you can trade that skew out there. Nothing is stopping you from doing it. I know sometimes it's easier. It's nice. And also if it was perhaps some sort of equity fund, you can put it in your equity account. So that would be a nice little wrapper for you. I understand why you would like such a thing, but the fund would probably also charge you an arm and a leg, and maybe they wouldn't construct it the way you would do it yourself, Mr. or Mrs. Arab. So the moral of the story is you can do it yourself, which is nice. But yeah, as far as I'm aware, there is no skew product. But Sean, you bring up a good point. There are the CVOLs out there on energy that CME has just listed. So you want to regale our listeners with that? Yeah,
we had Derek Salmon on the show just a few weeks ago talking about CME's new CVOL products. So if you wanted to look at the volatility of CME's energy products, that being crude and Henry Hub nat gas and metals and commodities, they have these CVOL products where you can actually look at the volatility index. It's not a futures contract. It's not an option, but it could be one of those products where you can monitor volatility and then express your opinion or your trade in the options, as Mark just mentioned. So there are resources. I think a great place to look would be CMEgroup.com for their CVOL product from an index perspective. I'm sure Derek Salmon's going to thank me for these comments.
Yes, but, Derek will be excited that you brought it. But that's actually a good pull there, Sean. I just pulled it up right now for myself. Listeners, you can find all of them very easily. Just type CME and CVOL into your browser, and they all come up on one page. That's easy. You scroll down here. You see all of them in one glance. Scroll down to energy. I'm looking at the WTI right now. It's at about a 39.25. Again, as Derek mentioned on the show recently, these are kind of end of day right now. So they're not intraday. They're working on updating them. But they also have a metric in there. You could see the skew, a couple of different ways that they measure the skew there and how much it has changed. So that is at least interesting. I also would mention to you that the CVOL calculation itself is analogous to the VIX calculation, that it does incorporate the skew. So at some point down the road, if the CVOL WTI does become a tradable product, then you would technically have something that incorporates the skew into it. So that's a good addition there, Sean. At the very least, you should keep an eye on it there, Mr. and Mrs. Arabs. And also, of course, I mean, it's a plug for our show, but you should check out the TWIFO report because it breaks down the skew for you in a great, some might say, overwhelming amount of detail, which is fun. Our audience likes that out there. So if you get all the skew data you can get completely for free if you go to cmegroup.com/TWIFO. All right, Sean, here's one for you. It comes from Mac. Mac wants to know, do you think small cap options have crossed the divide? Now where they are becoming more relevant and more active to the, and he puts this in quotes, the Robinhood small account crowd than larger and potentially scarier S&P 500 or NASDAQ options? You know, Sean, it's an interesting question. He kind of has a good point. I have noticed just in general an enormous uptick in questions and engagement about Russell 2000 just over the course of the past few months. Obviously, the data we talked about at the top of the show is a strong reason why it's up 43% since Halloween of last year. But what do you have to say for, what was his name, Mac's idea that small caps are now the hot thing with the Robinhood crowd, sir?
You know, these smaller notional contracts, and we've been talking about this since the launch of the micro series at CME, which has just had incredible volumes. Record-breaking volumes, to mention that we mentioned them earlier in the show. But as Mac has pointed out, small cap options. You know, Cboe Global Markets just launched just last week mini Russell options with the symbol MRUT, and these smaller notional values are a much more comfortable trade. But my guess is, the Robinhood, or let's call them talented investors rather than I hate to call them a Robinhood crowd, because sophisticated trading of options, you really have to know what you're doing to trade options. But our retail market has become extremely successful and have become even more sophisticated, and the volumes continue to grow. But the mini RUT options, MRUT, when you go to Cboe and check these out, they're 1/10 the size of the original RUT contract. These bigger contracts you're talking about, and from a cost perspective and from a margin perspective, they're a fraction of what the bigger contracts are. So much more comfortable products for trading. Some of the other things you can think about in regards to MRUT are they're European style, so there's no early exercise or being assigned on your options position. They're cash settled, so you're not taking delivery of anything. And the size is really a really important one. It's 1/10 the size. So it's interesting. You're going to get the great liquidity in the product because you have a mix of retail and institutional investors and traders trading the product. And you're dealing with an index that has really good, healthy volatility. Healthy volatility and good liquidity makes the trading experience a good one. Getting in and exiting your trade in your portfolio. So it's a great question, Mac. I do believe that we're at the beginnings of this expansion into smaller individuals, smaller wealth managers, more sophisticated individual traders trading derivative products, that being these options and futures. It's exciting. I hope that answers Mac's question.
It is exciting. And I think it brings up an interesting point. Like, these smaller accounts there. I mean, Matt mentioned it when he was on the show about a month ago. They're flocking into the cheapest options they can get their hands on, the Russell 2000, which were the 5 Delta, which are now probably a 40 Delta. The stock or the underlying has moved so much since then. But yeah, it's an interesting point, and we're certainly one to keep an eye on. Let's wrap it up here with this question from Hodels with a Z. I wonder what he's interested in. He wants to know, can you talk Bitcoin options on the show? Thanks. Yeah, we can. Just because you asked, Mr. or Mrs. Hodels. We'll pull it up for you. It's still not a lot lighting it up out there from an options perspective. By the way, coming into showtime, like I mentioned at the top of the show, a Bitcoin had about a 57,000 and change out there right now. It's up 7,700 points just this week alone, 15.6%. So a good run here for all things Bitcoin. Options wise, though, a little bit of a different story. 130 contracts on the tape so far this week, listeners. So there's just not a lot to parse here. Of that, the March contract going out in about 15 days has done 55.5% of the paper. If you're wondering, the at the money vol out there, 104 in the March contract, 103 going out to April, and then it drops off a little bit. Get out to May, it's 73. It's come in quite a bit, but not a lot of paper really to parse out there. So yeah, there isn't a ton to analyze out here. I mean, I can look at the skew for you really quickly here. The puts were 3.5% rich last week in March. This week, 1.3% cheap. So puts have come in quite a bit. The calls 4.3% rich last week. This week, 8.1% rich. So calls getting bid up, puts coming in as we're rallying 15%. Probably not that surprising out there. Overall numbers on the CME crypto front, though, are doing a lot more. I just pulled it up here. Of course, they added ETH to that mix recently as well. So just in the last day, just yesterday, the Bitcoin futures at 8,300 contracts. The ETH future is starting to tick up there, doing over 1,000, almost 1,100 contracts just yesterday. So that's decent paper for a new futures contract. And the options did, of that 100-odd contracts, they did 43 of them yesterday. So they're starting to tick up. I'm waiting for that moment, waiting for that inflection point. I guess it wasn't 50,000 in Bitcoin. Maybe it'll be 60. Who knows? But something's got to happen to really kick those options into high gear, because the futures are doing well, and even the ETH futures are doing well. But for whatever reason, the options on the Bitcoin futures, not quite there yet, even though they are getting stronger week after week. All right, everybody. Unfortunately, that music means we've come to the end of another epic sojourn through the world of all things futures options. Let's see today. We touched on ags, we touched on energy, we touched on rates, we touched on equities, got a little bit of crypto in there. I mean, what did we miss? I guess we missed metals. That's about the only complex of note that we really didn't touch on out there today. But everything else pretty much made it on this. It's only an hour show pretty much at the end of the day, listeners. We can't hit every product, even though we tried our hardest. So if there's a question, we had like Holdles, whatever his handle was there, who asked for crypto. If you ask nicely, we'll indulge you, even if they are only 100-odd contracts going up out there. But before we go, Mr. Sean, if folks are intrigued by all things Russell 2000, and judging by these numbers, they clearly are, where should they go? What should they do, sir?
Well, the best place to go is FTSERussell.com. And if you go to FTSERussell.com/blog, you'll see Philip Lawler's March 5th blog on the small caps and recent market volatility. It's a great write-up, because we always talk about what's driving the index, what sectors in the market are driving the index. And Philip just does a great job on large caps, the Russell 1000 versus small caps, and what's causing this great performance. And again, small caps have really outperformed the market. So the FTSERussell.com website /blogs, but just FTSERussell.com, and just scroll down, you're going to find just a tremendous amount of information in regards to all of our indexes, both fixed income and equities. There's just so much good information there that we talk about, not only the markets and our index performance, but also the economy. And these are all things that are driving the market. So there's just great ammunition there. You can also FTSERussell.com/recon, which already will give you the entire breakdown of the schedule of the events that take place up until our June 25th recon, which is the close of that Friday, June 25th. Is the largest, has historically been the largest volume trading day on the our partner stock exchanges. So there's momentum already building there with our rank day coming out on May 7th. So look there, but also, CME's website in regards to small caps and their micros and the record volumes that we've been seeing in the Russell 2000 on CME Group. There's a wealth of information on CME Group's website in regards to our products as well. And then I cannot not mention SIBO Global Markets as well. So SIBO.com, the mini RUT option, symbol MRUT. Please go there, check them out. Your listener, Mac, asked a great question today about interest in smaller notional value options contract. MRUT is the place to look. It's on SIBO.com. So please go to our partner websites as well as FTSERussell.com for all of the information. And you know how to reach me, Sean.Smith@LSEG.com. Happy to answer any questions anytime.
There you go. Hit him up, Sean.Smith@LSEG.com. That's London Stock Exchange Group out there, listeners, the parent firm of FTSE Russell. And of course, you know where to go for all this data we're always talking about throughout the show. The easiest place, CMEGroup.com/TWIFO. That's where you begin your journey. You can check out all the different complexes. Then you can jump on over to the Fed Watch or to Blue and Eric's data, all the other cool stuff they have cooking over there. But it all starts CMEGroup.com/TWIFO. We forgive you if you go to /TWIO. The cool kids go to /TWIFO. And on behalf of Sean, everybody over there in FTSE land, and everybody over there in CME land, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Keep them coming. We'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for all things vol views. Going to be a good one. A lot of vol on the docket this week. Got some great folks to help us talk about it. Then kick it off again on Monday with the option block, all the way through to another Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.